The stock market can be so frustrating at times, especially in a bear market, when it seems like day in and day out, week in and week out, and every single month we are losing money. What do we do? Unfortunately, by the time you start watching this video, new inflation numbers will be out, and I hate to say it, but things could get a whole lot worse before they get better. But just remember that over a 20-year consecutive period, you can take any 20 consecutive years, the S&P 500 has always come out on top. However, for long-term minded investors like myself, this could be a blessing in disguise. Now, Mark, how could losing money what seems like every single day seem like a blessing in disguise?
What, have you completely lost your mind?
Well, take this time, especially if you are a long-term minded investor, looking long-term, 10, 20 plus years, then this could be a time to accumulate shares in high quality stocks before they set to take off yet again in a new bull market that will be approaching. It could be 6 months, it could be a year, but we will get on the road, on the path to a brand new bull market, and you will look back and say, man, I wish I accumulated more shares during that time. And that is exactly the key to this channel here. We want to focus on high quality income producing stocks, such as dividend stocks or ETFs. This is exactly one reason why I believe we have been able to outperform the greater S&P 500, which is down over 20% on the year so far. And if you had a chance to watch my latest dividend portfolio update, which I dropped last week, then you will see that the portfolio was down just 7.7%. Now, albeit we are still in the red, but we are only down 7%, outperforming the S&P 500 by 13%. So while many of these blue chip stocks are down, we want to take advantage to keep accumulating as many as we can. And in today's video, I get this question a lot. We are going to focus on my top 5 best performing dividend stocks here in 2022. All of these stocks that we are going to look at today are up over 10% each. That is in the green, over 10% each on the year, meaning they are outperforming the S&P 500 by a very wide margin. With that being said, let's jump in. Hey everyone, Mark here, back for another video. If you're new to the channel, welcome. Here on this channel, we focus on income producing, dividend paying stocks in order to build a passive income stream that could help us retire early in the future. If you love dividend stocks or you love building wealth, then do me a huge favor and click that like button. Smash that like button down below, as that is huge for the algorithm here on YouTube, and it definitely helps with the growth of this channel moving forward. Also, if you're new to investing or just looking for a brand new platform, then definitely check out WeBull, where they are giving away 6 free stocks for opening a new account and funding it with any amount of money. You can open up a brand new account and fund it with $5 if you want to, and they will give you 6 free stocks valued up to $12,600. I will leave a link in the description down below. Definitely take advantage of that awesome promotion right now with WeBull. All right, so before we begin, let's start and look what the base case is right now. This is where the greater S&P 500 is right now. So looking at this chart, we will see that the S&P 500 is down over 20%. For many investors or money managers, the S&P 500 is often the benchmark. In reality, it has been proven that over time, professional investors that are just investing in individual stocks fail to beat the long-term return of the S&P 500 over time. So it is always important to have a good amount of exposure to an S&P 500 ETF or index fund. And if you've seen my latest dividend portfolio update, then you will know that my largest position in the portfolio is an S&P 500 index fund, something that I've had in my IRA for a number of years now. With that being said, let's take a look at my top 5 performing dividend stocks for 2022. These will be in order from the lowest to the highest performing dividend stocks. With that, let's begin with the 5th best performing dividend stock in my portfolio, which is Raytheon Technologies Corporation, stock ticker RTX. Raytheon is a position I have owned for a few years now, and it has been performing quite well, especially since coming out of the pandemic. During the March 2020 lows we saw in the greater market, shares of RTX fell below $50 for the first time since 2012. I last added to my shares of RTX back in July and August of 2020, shortly after those March lows we saw. On the year, shares of RTX are up 10% on the nose, but that is only half of where the company was just a few months back when shares were up over 20% back in April. For those of you unfamiliar, Raytheon Technologies is an aerospace and defense contractor that has commercial, military, and government customers, focusing primarily on defense products such as missile and defense systems. Countries around the world, especially as things have unfolded with Russia invading Ukraine, have been looking to enhance their defense systems, which has benefited the likes of defense contractors such as Raytheon, also Lockheed Martin, and General Dynamics. The company has been very shareholder friendly over the years, especially as cash flows continue to increase. Management has taken an approach to return money to shareholders via buybacks as well as growing dividends. The company currently pays a dividend of $2.20 on the year, which equates to a dividend yield of 2.31%. That dividend is well covered by cash flow and earnings, as the payout ratio sits at only 45%, leaving plenty of room for growth moving forward. Speaking of growth, the company has increased the dividend for 22 consecutive years now and counting. The average 5-year dividend growth rate for the stock has been roughly 5%. In terms of analyst expectations, looking here at this tip ranks chart, you can see that there are 7 analysts covering RTX. 6 of them rate the stock a buy, with 1 rating the stock a hold. Over those 7 analysts, they have an average price target over the next 12 months of roughly $117, implying that there is upside of nearly 25% moving forward. Next, we will take a look at the 4th best performing dividend stock in my portfolio, which is Vici Properties, stock ticker VICI. Vici Properties has been a new addition to the portfolio. It is a stock that I bought on January 13th, 2022, and we have now accumulated 282 shares to date. Vici is the 6th largest position in my dividend portfolio. For those of you unfamiliar, Vici Properties is a REIT, or a real estate investment trust, that owns the largest amount of real estate on the Las Vegas Strip. The company recently completed its $17.2 billion acquisition of MGM Growth Properties a few months back. Vici's portfolio consists of the following properties on the Las Vegas Strip: MGM Grand, Park GM, formerly the Monte Carlo, the Venetian, Caesars Palace, Mandalay Bay, Luxor, New York, New York, the Mirage, and Excalibur, just to name a few. The company has a very wide moat, as it is very difficult for new developers to come in and build casinos in today's world. Plus, if you have ever been to Vegas, there's not really anywhere else you can build in order to have the premier strip locations that Vici has. Vici shares for me are currently up 10.7% since making the purchase earlier in the year, and the company pays a solid dividend of $1.44 per share, which equates to a dividend yield of 4.6%. This is the highest dividend yield you will see amongst these 5 stocks we will cover today. Analysts have been very bullish on the shares of Vici, with 9 analysts covering the stock having a strong buy rating overall, and the company has a 12-month price target of $36, implying 15% growth potential from current levels. The 3rd best performing stock in my dividend portfolio so far here in 2022 is one of my favorite positions, and that is Abbvie, stock ticker ABBV. Abbvie is a stock that I consider to be an investor's trifecta. The stock offers, number 1, growth potential, as the stock is up nearly 15% on the year and up over 365% over the past 10 years, doubling the production of that of the S&P 500. Number 2, the stock offers a high dividend yield. The stock currently pays a dividend that yields 3.6%. You may be saying to yourself, well, that's not all that high, but if you recall in my prior videos, dividend yield is predicated off the stock price. As the stock price goes up, dividend yield comes down. As a stock price goes down, dividend yield will go up. As we have seen from the charts, Abbvie has been performing quite well. Thus, a higher stock price has resulted in a lower yield. Even though the company is trying to increase the dividend each and every year, the stock price has grown faster than the dividend growth. Looking at this chart here, which is looking back over the past 3 years, you can see that the average dividend yield has been around 4.75%, which I consider to be a high dividend yield. Third in the investor trifecta, the stock of Abbvie offers dividend growth. Often when a stock has a high yield, something over 4%, it often has slower growth, both from a dividend standpoint as well as a stock appreciation standpoint. Higher yields often coincide with more mature businesses. Not Abbvie. You're getting the growth potential, the high yield, and dividend growth that over the past 5 years has been growing at an average annual rate of 17.5%, which is awesome. The company itself has benefited from having the world's best-selling drug over the years in Humira, which at one point accounted for over 70% of the company's revenues. That party is slowly coming to an end as that drug loses its patent protection here in 2023 here in the US, and it has already lost patent protection over in Europe. However, upcoming drugs such as Skyrizi, Rinvoq, and even Imbruvica, which has been co-invented with Johnson & Johnson, have been growing at very fast paces, and the company has very high potential figures for these drugs in the coming years. Abbvie is taking a much more diversified approach, which is great for investors. In terms of analysts' expectations, shares of Abbvie currently have a buy rating, with a $162 price target expected over the next 12 months and a price target high of $200. The second best performing dividend stock in my portfolio for 2022 has been Lockheed Martin, stock ticker LMT. Lockheed Martin is yet another defense contractor. Remember, we just looked at Raytheon Technologies, but with Lockheed Martin, they focus more on aerospace than that of Raytheon. When you think of Lockheed Martin, you're going to think of military fighter jets and or Sikorsky helicopters, among many other defense products, like the highly publicized Javelin, which has been something that has been sent over to Ukraine to help support them in their war with Russia. On the year, shares of Lockheed Martin, stock ticker LMT, have returned 18%, outpacing the S&P 500 by nearly 40%. And on top of that, I get a dividend as well. Lockheed Martin is yet another company that has seen a boom and will continue to as it's winning new defense contracts left and right, which are expected to fuel growth as we approach 2023, and these contracts last for years down the road. In fact, a few hours before recording this, Lockheed Martin was awarded a $9 million rotary and missions contract, and a few weeks prior, Lockheed was awarded a $2.3 billion Army Black Hawk contract for 120 Black Hawk helicopters and the option for an additional 135 aircraft for the Army. Should the options be exercised, the contract would be worth up to $4.4 billion. These deliveries are set to begin this year and go through the year 2027. This is a very cash flow rich company that has done a fantastic job returning money to shareholders. The company pays an annual dividend of $11.20, which equates to a dividend yield of 2.65%. The company has paid an increasing dividend for 20 years now, approaching that dividend aristocrat level. Over the past 5 years, the company has increased the dividend an average of nearly 10% per year. Of the 11 analysts covering LMT shares right now, 6 of them rate the shares a hold and 5 of them rate it a buy. The average price target among the 11 analysts is $503, indicating 20% upside from current levels. Now we will get to the top performing dividend stock in my portfolio for 2022 so far, and that is BristolMyers Squibb, stock ticker BMY. BristolMyers has been a big winner here in 2022 thus far, and the company has a strong portfolio of products as well as a strong pipeline. So when I decided to buy shares in June of 2020, the stock was trading at an insane discount. Now, after its strong run, shares have been trading sideways over the past year, and I took advantage of taking a little of those gains by selling 6 shares at an average price of $78, which is roughly $3 higher than the current price, so not too far off from where we currently are. This was not a sale that is due to me losing confidence, but it was more due to the fact that the stock had been on a huge run and it's a position within my portfolio, so I wanted to ring the register for a few shares. On the year, shares of BMY are up a staggering 22%, outpacing the S&P 500 by more than 40%. In terms of the company, analysts are looking for revenues to be topping $50 billion by the year 2025, with an eventual decline as we approach 2030. Which could make things a little tricky in terms of valuation. The stock does have some upside, but it could be limited. Analysts tend to agree with this assumption, and they rate the stock a moderate buy, with an average price target among 13 analysts of only $78, which implies roughly less than 5% upside from current levels, so maybe the sale was good timing. We will see. BMY currently pays a dividend on an annual basis of $2.16 per share, which equates to a dividend yield of 2.9%. The company has grown the dividend for 15 consecutive years now and counting, and has a 5-year dividend growth rate of 6.4%. On the year, these dividend stocks have been holding my portfolio up. Again, we are down 7.7% thus far, but the greater S&P 500 is down over 20%. So albeit we are down, we are still outperforming by 13%. And that's due to the fact that we are investing in high quality cash flowing companies. This doesn't even take into account the dividend income that we are receiving on a monthly basis. Again, if you haven't checked out my dividend update, my dividend portfolio update, I will leave a link in the description down below. Now, to gain an understanding of how much income you could receive from, say, just these 5 stocks, let's take a look at how much you would earn if you were to invest $5,000 right now into each of these dividend paying stocks. The most you would get would come from Vici Properties, which would pay you $229 per year. The next would be Abbvie, which you would receive $184, followed by BristolMyers Squibb, which would pay $143. Fourth would be Lockheed Martin, which you would earn $133 on an annual basis in year 1. And last, you would receive $108 from Raytheon Technologies. Altogether, you would receive a grand total in annual dividend income in year 1, slightly below $800 per year. That's pretty solid dividend income just in year 1. But remember, I focus on dividend growers, dividend growth stocks. These are companies that are increasing their dividend on a consistent basis each and every year. With that being said, I hope you enjoyed the video, and if you haven't done so yet, please smash that like button down below, as that is huge for the growth of this channel, and take advantage of that WeBull promotion where you will get 6 free stocks valued up to $12,600. I hope you enjoyed the video, and thank you for watching. We will see you next time. Take care.